Welcome to my channel and this week review of stock markets and stocks in my portfolio. TSX finished flat on the week, and all major US indexes were either flat or slightly down. This is what I was expecting last week, when I mentioned that usually there is a sell-off at the end of the month by large institutions, for profit-taking and portfolio rebalancing. Next week, I expect a small rally on Monday and Tuesday, as there is usually some buying at the beginning of the month, with bargain hunters scavenging the market for good deals. But as I also mentioned last week, my bets are still on a meaningful correction over the summer across all markets. I think the 2-year chart supports my expectations, wanting to go lower before moving higher. Short sellers may see this too, and quite likely will try to pounce next week. So I am preparing for the worst-case scenario by taking as much profit as I can, and keeping it in cash for later bargain shopping. Speaking of bargain hunting, I opened 2 new positions last week, as I couldn't resist the signals I saw on their price charts. Unfortunately, one of them was driven by a rushed decision, and now, I regret buying it. Oh well, at least it will serve as a reminder to always complete thorough analysis, before pushing the buy button. Both companies provide services for oil and gas industry. Both are small caps and low floats. The first company is called Total Energy Services. It operates as an energy services company in Canada, the United States, and Australia. It provides drilling rigs and other rental equipment to other companies. The company is profitable, has low PE, and pays a dividend of 3.8%. Not a lot, but not too bad either. I had this company in my portfolio earlier this year, but sold after the price reached my target. Last week, the chart started to look like a good entry point again. I like when the price bounces off 120 SMA. I bought half of my usual allocation and will buy the other half once the reversal trend is confirmed. I also think that the price might still drop to $8, but not much lower. This is another reason why I decided not to fill the entire position right now, so that I could buy more at lower price. Analysts' recommendation for this company is a buy, and the target price of $16 is considerably higher than today's price. So I think probability is high for the share price to bounce back to at least $12, which would be my target price to start taking profit. The second company I bought is called Source Energy Services. It engages in the production and distribution of northern white frac sand, and also provides storage and logistics services for oil and gas companies. Its price chart looks almost identical to the first company, and in addition, I was also impressed by the company's extremely low PE. Unfortunately, I didn't have the time to do a more thorough research about this company until after the markets were closed. This is when I noticed that Source Energy does not pay dividends, and found out that the low PE was attributed primarily to a one-time accounting adjustment. In fact, the most recent quarter was showing a substantial decline in net earnings, which I was not happy to see either. So overall, despite a promising price chart, this company does not meet my buying criteria, and I will be looking to sell it next week. This shows that, even with experience, we still tend to make mistakes, and that mastering trading discipline is a perpetual process. That's all for this week's update. Let's see what sentiment the first week of June will bring to the markets.